Yes, it's awesome to be back with you on this broadcast channel of Amagate Radio Communications. The program is Optimizing Opportunities in Ethiopian Banking Sector, and your anchor is my humble self, Abiodun Abari. Thanks for being there. Last week, we continued to solidify our foundational knowledge as it concerns the Ethiopian scenario, and we looked at critical aspects of the banking proclamation issued by the National Bank of Ethiopia in December 2024, which I like to refer to as the game changer, and in signaling a seismic shift in Ethiopian banking policy. Yes, talking about critical aspects, we talk about the importance of banks in achieving economic development, the essence of mobilization of funds, the essence of channeling funds to critical sectors to develop the economy, to ensure inclusive development, the role of banks in the payment and settlement system in the Ethiopian economy. Look at all that, and you understand that having a necessary regulatory framework to actually ease foreign participation in Ethiopian banking is very, very necessary. Is actually a desideratum, and the aim of this legal and regulatory framework, all right, is to positively impact the competitiveness and efficiency of the banking sector. So the importance of the National Bank of Ethiopia bring the regulatory organization, the regulatory authority having adequate authority to deliver its responsibility, and ensuring the overall stability of the entire financial system, so that even if there is a failure of any bank, that event does not significantly impugn or disrupt the overall financial system, so that the ability to insulate the system from disruption, when any bank is no longer viable. So it's quite very, very, very important. Okay, because if that kind of scenario is not well managed, it can lead to instability of the financial system, and we understand the implications on the Ethiopian economy, the Ethiopian government, and the good people of Ethiopia. So the responsibility to continuously ensure the safety, the soundness, the stability of the banking system, of the financial system, is very, very important. So the framework has to be adequate enough to be to accommodate current and emerging trends, as it were. Also, you talk about guiding the establishment of foreign bank subsidiary, foreign bank branch, or the representative office of a foreign branch in Ethiopian banks. Okay, so regulatory framework to narrow that is being played, whether there is an extension or not. Knowledge and skills transfer is very, very important for the Ethiopian government, for the Ethiopian people, and replacement by an Ethiopian national. Okay, after the tenure of the foreign employee, right? And you can cite maybe apart from national development, also maybe national security issues, because CEOs usually are very strong in the financial system. They have strong influence, and they all have access to critical information. And if their loyalty is not to the Ethiopian government and Ethiopian people, that maybe national security, Ethiopian banks, distressed existing Ethiopian banks. Okay, so that the sustainability, the stability of the entire financial system is protected, okay, and is ensured. Well, that means that the financial stability is being prioritized over local content. Okay, and that kind of action and that kind of guideline, that kind of approval, we actually inspire confidence, instill confidence in foreign investors when it is seen that the primary role, I mean, when it is seen that the primacy of the stability of the entire financial system is ensured. Yes, and also talk about another critical bank branch, or the representative office of a foreign bank, or outright investment in Ethiopian banks. Okay, so regulatory framework to guide that establishment. And of course we talk about range of dividends and salaries earned, right? Quite critical for foreign investors to understand what guidelines are there to consider to fulfill in order to ensure reinvestment and repatriation of dividends and salaries earned. Okay, so we also talk about rescuing a distressed bank. Okay, and you have waivers in that there can be approvals given for the partial or full takeover of distressed banks, and that's distressed Ethiopian banks, distressed existing Ethiopian banks. Okay, so that the sustainability, the stability of the entire financial system is protected, okay, and is ensured. Well, that means that the financial stability is being prioritized over local content, okay, and that kind of action and that kind of guideline, that kind of approval will actually inspire confidence, instill confidence in foreign investors when it is seen that the primary role, I mean, when it is seen that the primacy of the stability of the entire financial system is ensured. Yes, and also talk about another critical emphasis on ownership of property for banking business purpose and ownership of other properties, including foreclosed and acquired mortgaged property. Okay, so that's another critical issue for foreign investors. They will want to understand, the guidelines as this concerns the ownership of property for banking business purposes. Okay, and critically also talk about the powers of the National Bank of Ethiopia, the regulatory authority, the powers to determine additional minimum conditions and requirements in licensing, okay, on licensing and license renewal of foreign bank subsidiaries, foreign bank branches, or representative office of foreign bank, all right, and also investment by foreign nationals or foreign-owned Ethiopian organizations in the bank, and limits on number of foreign bank subsidiaries and foreign bank branches to be licensed, including related vetting criteria, and limits on percentage of the total assets of the banking system to be owned by foreign banks. So I'll talk about the issues that are very achieved. So emphasis too on the need to abide by the prudential guidelines published by the regulatory authority, and also approvals for employing foreign chief executive officers, CEOs, and senior executive officers. Very, very important in determining investment decisions by foreign investors, okay, and other positions that require specialized knowledge too, or expertise through recruitment or staff transfer. Okay, so that means two methods of actually onboarding those specialized skills, those specialized officers in terms of recruitment or staff transfer from an existing organization or the parent company of the investing bank. Okay, so and those that kind of appointment will be on contract basis and a maximum term of 5 years. Okay, so there'll be a determination of the maximum number and a percentage share of foreign employees in the bank. Okay, as per National Bank of Ethiopia's directive. Okay, that's ensuring that local content objectives are ensured. And even those approvals will actually help the new banks actually settle in easily, seamlessly, bringing in their own people from the existing structures where they have excelled, people they have a trust in, and even if it's a true equipment too, recruiting through a system that's has delivered for them. Okay, we most likely ensure that the new banks, the new subsidiaries or branches or representative offices start on the strong footing. Yes, and there's also approval modalities for term extension. There is actually possibilities of a term extension if it has to be justified. Extension of another 5 years, okay, and whatever scenario that is being played, whether there's an extension or not, knowledge and skills transfer is very, very important for the Ethiopian government, for the Ethiopian people, and replacement by an Ethiopian national, okay, after the tenure of the foreign employee, right? And you can cite maybe apart from national development, also maybe national security issues, because CEOs usually are very strong in the financial system. They have strong influence, and they all have access to critical information. And if their loyalty is not to the Ethiopian government and Ethiopian people, that maybe national security might even be compromised through the financial system. Okay, or look at maybe a CEO that is in tune with the enemies of Ethiopia will help such organizations, launder money and hide money and stash money, and give them all the financial and judicial help that he or she could master to ensure that there is his own friends, his own courts can achieve their own objectives, at the expense of the people and government of Ethiopia. So, such positions, such as CEO of banks, it might even be in the interest of the national security of Ethiopia to ensure that ultimately, even if the foreign employees are recruited or transferred at the beginning, okay, at the start of the foreign bank subsidiary or branch or representative office, that knowledge and skills is transferred. Those transfers are made with the intention of ensuring knowledge and skills transfer, so that at the end of the tenure, or even if there's an extension, there's a replacement by a competent Ethiopian national. All right. Yes. So we look at this 180-degree turn as part of this 180-degree turn in terms of the banking policy adopted by the Ethiopian government. Okay, as part of the implementation of the reforms initiated by Prime Minister Abiy Ahmed Ali. And this seismic shift is quite important in the country for a people where less than half the population have access to banking services, and a country that is actually the second most populous in Africa. Okay, and when we look at the lack of access to finance, the lack of access to our financial tools, all right, as actually something that is plaguing the financial system of Ethiopia. That is plaguing the financial people, the Ethiopian economy. All right, and look at the mega number of Ethiopians that are leveraged, the mega number of Ethiopians that have existing bank loans, that have access to these finance and financial tools. Okay, and you understand that the economy can do much more if there is more access to finance and financial tools, if there is a better financial inclusion. Okay, if there's improved financial inclusion, improved access to credit. Okay, so people will be able to convert their dreams and aspirations, their thoughts into real life situations, into eventualities, into real life possibilities, happenings before their very eyes, so they can contribute to the expansion, to the growth of the economy, because it's quite very, very important that the economy grows faster than the population. Very important. And to also look at the importance of SMEs in the economy, the private sector. The growth of the private sector, very important for the economy, because government can't just go it alone. Okay, so SMEs are usually the backbone of the economy, and if SMEs don't have access to finance, if they don't have access to financial tools, it means that the necessary impacts they should have on the economy will not be achieved. Okay, and the implications are also for the investment too, and economic growth, like I said. Okay, in terms of lack of access to finance, lack of access to credit, okay, by individuals, by organizations, by SMEs, by private sector, right? So the implications is that we not have the right and adequate level of investment, okay, to ensure economic growth, and the implications also for the standard of living. In terms of, when you talk about housing, talk of medical facilities, health facilities, all right, and you also talk about the food, all right, the quality of food, and then the environment that people live in, because people will not be able to invest in their environment, invest in their living standard, which of course we can impact positively on their productivity. And of course, look at this lack of access to finance and financial tools can also hamper people getting a better education, improved education, specialized skills to improve their lives, to improve their living conditions, okay, to put them in the position to better impact on the economy, to better contribute significantly to the economy. Creating a whole range of professionals, in the society that can actually impact economic growth in great proportions. So we look at this overall impact of this lack of access to finance, lack of access to financial tools on the economy, and we understand that yes, the economic reform agenda undertaken by Prime Minister Abiy Ahmed Ali is somewhat justified. That economic reform agenda necessary to ensure competitiveness and foreign investment. All right, and you understand that yes, the financial sector is actually taking center stage. Finance being the lifeblood of the economy, very understandably so. Okay, so the importance of attracting foreign direct investment and the modernization of the banking sector to ensure its competitiveness. So the goals are clear, the motivations are clear, but of course the backlash there, all right, and the skepticism, the reservations, the fears, all right. So for a country that is transitioning, it's just expected, okay, that the people will be there are people that will express concerns in some quarters, and we have to examine those concerns and see whether they are valid, whether they are legitimate. Okay, when you have lawmakers in the country, of course they are stakeholders and they are representatives of their people, and they articulate and they aggregate their people's interest, and they, some of them are worried about the effect of this new law. This banking proclamation, this 180-degree, the seismic shift among the in the banking sector, right? And they're concerned about the effect of on interest-free banking, okay, or Islamic banking, or even Sharia banking, all right? And amidst the increasing call for Sharia compliant options in the financial sector, okay. So, and of course, lawmakers represent the interest of their people, and there may even be also outside foreign interest, okay, in terms of religious interest, maybe interest from the OIC, Organization of Islamic Countries, and even maybe some sort of talking about the Muslim minority in the country, giving them that sense of belonging. Creating those options for them that are consistent, that are compliant with their faith, their religion, their practice. And of course, other concerns about the timing, considering the political climate and the economic climate, and talking about the economy, trying to manage the debt situation, okay, yes, success in terms of debt rescheduling, and, but it's still a work in progress. The economy is not yet there, okay, and also talking about the inflation. Yes, a lot has been done to tame inflation, okay, but it's not yet a single digit, so a lot has to be done, alright. So there are others, okay, that have legitimate concerns that, okay, why don't we put our house in order first? Okay, why don't we put the cart before the horse? Or why are we putting the cart before the horse? Okay, that we are supposed to put our house in order before bringing in foreigners to participate in the economy. Okay, that the timing is not perfect for this opening up exercise. All right, so we look at those concerns. Are they valid? Are they legitimate? Okay, so also valid issues being raised as regards the future and survival of the small Ethiopian banks. That these are big banks, these current banks, or existing banks, that when they come in, these global brands, because of their brands, and within not due to competition, stifle the Ethiopian brands, crush small Ethiopian banks under competition, because customers will tend towards them, organizations will tend towards them because of their brands, and they're well known for efficiency, service delivery, and our customers will always want the best value for their resources and time, and funds and so on. So legitimate concerns about this protection for the small Ethiopian banks. Okay, will they be obliterated through competition? Obliterated as a result of competition from stronger and bigger international banks, international brands that are well known and well established, that are very well strong. So that fear of the unknown is there, is palpable, and is it justified? Okay, and I believe that no matter the fears and no matter the timing, that there'll still be concerns, there'll still be unfinished business, there'll still be work in progress, and I believe that Ethiopia is actually coming late to the party, okay, and I believe that Ethiopia should not have waited even this long, okay, and you talk about questions about if Ethiopia should have waited to address its internal issues before opening up this banking sector. Okay, so like I said, tremendous work has been done in terms of inflation, taming inflation, and ensuring that the debt is under control. Okay, so it must be noted that as part of work done in drafting this banking proclamation, I'm sorting a lot of consultation, due diligence to ensure that that's pathway to stability, to growth, to development, to economic prosperity is provided. Okay, and you understand that the stability of the entire financial system, it's an overall objective. So we talk about the importance of granting the National Bank of Ethiopia adequate authority to be able to deliver on its responsibilities, talking about authority being commensurate with responsibility. So the autonomy quite important, and it's important that they're not just independent and autonomous, but they are seen to be independent and autonomous. Okay, so that the government determination of lending practices or monetary policy is now being shifted to a market-driven approach, a market-dictated approach. Since the CBN will rely on economic data to determine rates. Okay, and With that greater intervention and greater influence in the financial system, the National Bank of Ethiopia will be able to adjust quickly in time to global shifts. Okay, that response might be very, very important for the stability of the overall financial system. Right. So with all this authority too, there should also be adequate transparency and accountability on the part of the MBE. Okay, so that these duties, these responsibilities can be adequately, honorably, and faithfully discharged. Right. So despite the reservations and all these hullabaloo as per the changes these will bring to the system, there are these benefits that we cannot emphasize the better competition that this foreign participation will bring. We ensure that yes, there will be better products, personalized services, targeted services. You have AI-powered personalized services, products, and there will be products and services efficiency, and you have bots, AI-powered bots, powering customer experiences. Okay, and that with that consistency of service across service channels. Okay, so the consumer is better for it. The Ethiopian people are better for it. The Ethiopian economy will profit from that. Okay, that is my belief. So, and of course, you look at competitive interests, competitive rates on loans, okay, and even personalized loans too that are suited for purpose, suited to the customer, targeted customer. Talking about innovative products, in the adoption of technology, modernization, and in the enhancement of real-time banking. All right, and you also have the investment in anti-fraud systems. Okay, so that's to reduce fraud and to the barest minimum and enhance confidence in the system. Okay, so of course this participation too will also bring about broader access to banking services, a wide array of banking services, right? And that assurance of financial inclusion is actually heightened. All right, so you have the unbanked being captured, coming in, because there'll be wider access, wider resources to reach people, to reach you unbanked, to reach your, there'll be rural access, even through agency banking, which has been widely successful, largely successful in countries like Nigeria. Okay, and look at targeting disadvantaged groups. I'm talking about youths and women, groups, students, farmers, artisans, largely the informal sector, coming up with tailor-made services, products and services for them. Okay, targeting them. Okay, targeting their lifestyle, targeting their businesses, to improve them. That's and ensure access to finance and financial tools for them. Okay, and that will actually enhance financial inclusion. And the foreign direct investment aspect too cannot be overflogged. Okay, you talk about the impact on the economic expansion and job creation. Okay, because the foreign participation of banks, the participation of foreign banks will inspire confidence among foreign investors. Okay, bilateral and multilateral institutions. Okay, the mere fact that some banks start operating in Ethiopia or have invested in Ethiopia banks will inspire confidence necessary to attract foreign direct investment. And we also look at that impact on the economic expansion, okay, and job creation. That's improvement. Latching on that relationship that is these foreign people have with these forein banks that have now invested in Ethiopia. The impact on improved infrastructure, financing of roads, bridges, hotels, airports, railways, because there will now be more financing options for the economy, for the government, and for the people of Ethiopia to pursue their priorities. Now, at this juncture, I would like to end today's episode, and I trust that it's been a rewarding time because for my own end, I've found it very, very impactful. But please do remember that at Armorgate, we are always ready to help and support organizations to work optimally, creating frameworks and processes for optimization of resources and attainment of goals. You can contact us on Facebook, LinkedIn, Instagram at Armorgate. You can also visit our website at www.thearmorgate.org. Our email is contact@thearmorgate.org. And please don't forget to subscribe to our YouTube channel at Armorgate. And until I come up on your devices again, it's been a pleasure. It's bye for now, and God bless. Thank you.